Okay, good morning. Welcome to Chaikin PowerFeed, your daily market digest. Today is Friday, May 11th, 2018. My name is Dan Russo. I am the host and the chief market strategist at Chaikin Analytics. And if you want to follow me, you can do so on Twitter at Dan_Russo_CMT. As always, PowerFeed is brought to you by Chaikin Analytics. You can get your free daily Chaikin PowerFeed at www.chaikinanalytics.com/PowerFeed TV. So diving right into yesterday's action, U.S. equities were higher in Thursday trading with the S&P 500 adding close to 1%. Treasuries were mostly stronger with some curve flattening, and that helped to keep the financials in check. The dollar was down on the yen and euro crosses, giving back some of the recent gains. Gold finished up about 70 basis points. Oil spent most of the session lower, but WTI did rally to settle up 30 basis points. Telecom, utilities, and technology outperformed, while discretionary, staples, and industrials lagged. The April CPI came in softer than expected, which led some investors to believe that the Federal Open Market Committee will not alter the plans that they have set for interest rate hikes this year. Recall that the possible pickup in inflation was one of the key reasons noted for the correction from the January highs for the equity market. So turning to the market now and some of the key levels which we are watching, here's our short-term chart of the S&P 500. You can see that we have kind of broken the downtrend from the January highs, which is encouraging. The S&P appears to be emerging from the consolidation, which has been in place since January, after moving up through two of the key resistance levels, which we have been highlighting, those being 2675 and 2710. We can see that the index has kind of moved through a downtrend here, and we'll see if that can continue. Something that is encouraging to me that I've been watching is the RSI, my measure for momentum, actually took out some of the local highs. So market beginning to move up and out of the consolidation that has marked trading since January. You can recall that our view is that the consolidation has been within the context of a secular uptrend. So the levels that we are watching: support 2658 to 2675, the prior highs, lows, and closes. Then we have 2620. That is the 200-day moving average. Below that, we have the February 8th low at 2581, and then the extreme lows from the move down here and here at 2545 and 2533. Resistance 2741, and then you'll get some round number resistance at 2800. If you're bullish, you want to see the market take out 2741 and continue to work higher. If you're bearish, you're going to want to see a sustained close below the 200-day moving average, and then ultimately an undercut of that February low. That would give you confidence that the secular uptrend was in fact reversing. So turning to your market in a minute, PowerFeed subscribers would receive this on a daily basis. As we said, the S&P added nearly 1% as inflation concerns ebbed. The 10-year yield retreated from 3%. Semiconductors continue to rebound. That is a big theme that I am focused on. Every Friday in my morning note to Chaikin Analytics subscribers, I focus on some thematics, key themes that give me an indication of which way the trend is likely to go. Semiconductors is one of the big themes I'm focused on, as well as the FANG stocks, which are on the verge of a breakout, those being Facebook, Amazon, Apple, Netflix, and Google. Futures this morning do point to a slightly higher open. So turning to the power bars on the major indices, the Chaikin power bars measure how many stocks are either very bullish or bullish in Chaikin Analytics, how many are neutral, and how many are either very bearish or bearish. Obviously, the skew, either bullishly or bearishly, can give you an indication of the likely forward direction of the market. We can see that the Dow is balanced at 8 and 8. The S&P is getting close to balance, and this metric has improved all week long, gotten better throughout the week. More of a balanced level, 94 bullish to very bullish. Versus 97 bearish to very bearish. NASDAQ skews positive. Small caps, big theme for me. Small cap outperformance is something I've been focused on. It's something that I expect to continue. Two drivers there: the stronger dollar, as well as the trade concerns with China. We can see it here in the power bars. 466 bullish or very bullish stocks within the small cap space for 333 bearish or very bearish. As we said, 10-year yield retreated from 3%. Bonds were higher yesterday. That did help the utility sector. Look at the outperformance here. Utilities had been lagging as the 10-year yield was working higher. They outperformed yesterday with a little retreat in yields. I do, however, expect 10-year yields to continue to work higher. The key level I was watching was 2.6 to 2.62%. We broke through that. I think ultimately the 10-year yield can get to 3.2%. So according to the Chaikin Power Bar, small cap stocks remain somewhat more bullish than large cap stocks, and the major indexes are mixed. Something else that PowerFeed subscribers receive every day is a stock of the day, and today's is Phillips 66. Comes to us from the oil industry. No surprise, oil's been strong, energy's been strong. Phillips went out last night at $117.96, up 39 basis points. Ticker symbol is PSX. It has a very bullish Chaikin power gauge rating, and the Chaikin power gauge rating for Phillips 66 is very bullish due to very strong earnings, very strong price and volume activity. That's in the technical factor, and very positive expert activity. That's down here. And then, it does have attractive financial metrics. So PSX is a name that we want to have on a bullish watch list. Let's take a look at the chart now. We can see the very bullish power gauge rating up here in the upper left-hand corner. The stock has a strong trend and is in a strong industry. So that's all a great starting point. We know we're kind of fishing in the right pond for a long idea. From there, we read the chart from the bottom up. The ribbon here tells us where the power gauge has been throughout the past 12 months. The green here, we can see it has been bullish or very bullish since the April timeframe. Next, we want to see how the stock is doing relative to the broader market. So we have a proprietary relative strength metric. We look at the stocks relative to the SPY, and we can see that back at the end of March, beginning of April, this did turn positive and has been getting progressively stronger. That is a positive sign. When we have a bullish stock or a very bullish stock and it is strongly outperforming the market, we call that the dynamic duo. That is a compelling setup for long ideas. So then we want to look tactically. Does it make sense to get involved now? We have our overbought, oversold oscillator, currently closer to oversold than overbought. This is a short-term oscillator, which is why it can register oversold readings even as the stock is as strong as it has been. Next, we look at money flow. The Chaikin money flow indicator gives us a kind of sense of institutional buying and selling, and you can see that for Phillips 66, the money flow indicator is kind of at the highest levels it's been in 12 months. So here we can see the stock broke out at the $105 level, trading top end of the range, top end of the volatility bands, above the rising long-term trend line. Me personally, I'd like to see this consolidate a little bit, maybe come back and test support around the $105, $110 level. Certainly one I want to have on a bullish watch list, especially as oil continues to work higher and the energy sector continues to be strong. Phillips 66, ticker PSX, one to have on a bullish watch list. Moving now to the sectors. Every day, Chaikin PowerFeed subscribers can kind of get a quick snapshot of how the major sectors are performing over the last 5 days. Technology, top of the list. Really, technology has been strong since Apple's earnings report early last week, and we want to see this as bullish. And if you're bullish, you want to see technology outperform. Technology is 25 or 26% of the S&P 500. How they are doing is really going to give you a good indication of how the market's doing overall, and technology has been leading over the past 5 days, and encouragingly for the bulls, the second largest weight in the S&P 500, financials at about 15%, also doing well over the past 5 days. Utilities, bottom of the bunch, not a surprise. As I said earlier, rates have been moving higher. That is a drag on utilities, which some equity investors use as a bond proxy. What's surprising to me is real estate up 2.33% over the past 5 days, even as rates has moved higher. If rates continue to move higher, I would expect weakness to start to materialize in the real estate sector. Keep an eye on that group and keep an eye on for names that potentially breaking down in real estate. Given the rally that we've had, I don't necessarily know that it has a lot of legs. Turning now to our industry in focus. Also, PowerFeed subscribers receive this on a daily basis. Today's focus is on the regional bank services. Strong group. We can see the power bars here again. 55 bullish or very bullish stocks for 6 bearish or very bearish stocks. Over the past 6 months, the regional banking subsector has outperformed the S&P 500 by 9.13%. That's 9.13% of outperformance. Its power bar ratio, which measures the future potential of the group is very strong with more bullish than bearish stocks. As we said, you can see that up here. It is currently ranked number 2 of 21 subsectors that we track and has moved up 2 slots over the past week. Some of the indicative names in that group, all with very bullish power gauge rating. We have Renaissance Corp, ticker RNST, MB Financial, ticker MBFI, and First Bank Corp, ticker FBP. Let's take a look at one of those stocks here today. Renaissance Corp, ticker RNST, 47.34, closed last night up 28 basis points, a very bullish Chaikin power gauge rating. We have a strong stock in a strong industry. So moving to the bottom of the chart, as I said, the ribbon tells us where the power gauge has been over the past 12 months, and we can see that it's currently on a bullish or very bullish reading. We know it's very bullish and has been so since April. How is it performing relative to the broader market? We can see that it's strong. It turned positive back in the March timeframe and has progressively gotten stronger relative to the SPY. So this powerful combination, our dynamic duo, is in place. From a tactical standpoint, stock is closer to oversold than it is to overbought based on our indicator. You can see that here. Maybe a compelling entry point. Money flow, our indication of institutional buying and institutional selling, has been mostly bullish since last fall, since the September-October timeframe, indicating that institutions have been accumulating the stock even as it was consolidating here. And you can see the stock moved up and out of the consolidation through the $45 level, pulled back to retest, and is now on its way higher again. Has had a string of positive earnings surprises. This is a compelling stock on the long side, above the long-term trend line. One certainly to keep an eye on, if not actually add to the portfolio. Ticker RNST looks bullish. Our earnings update, Thursday's earnings surprises, NVIDIA beat by 41 cents. So we want to keep an eye on that stock today because it is trading lower in the pre-market. Duke Energy in the utilities space beats by 13 cents. Symantec beats by a penny, but the stock is getting hit on some idiosyncratic news that they announced. And the Trade Desk is a strong name within the internet advertising space, currently on a neutral rating, but the stock is trading up over 20% in the pre-market after beating by 19 cents. As I said, NVIDIA, bellwether in the semiconductors group. We can see here the stock had a strong run into earnings. Obviously, expectations were high. The company beats by 41 cents, but the stock is trading down about 2% in the pre-market. Ideally, you want to see the stock kind of hold above this $240 to $250 level. That would give you some consolation as a bull. You can see it's been accumulated. You can see the stock is on a bullish power gauge rating. It's been outperforming the market. It has been oversold, though. So a healthy consolidation, maybe pull back to 240, 250 would not necessarily be a bad thing here, given the run-up that the stock has had. It would give the bulls a chance to kind of reset here and work on the next stage higher. Keep an eye on NVIDIA today. Other than that, earnings calendar light, no major companies reporting. So as I said, on Fridays for Chaikin Analytics subscribers, I focus on key themes that can help give me and our clients a view of where the market could be headed. Semiconductors are a key leader in the market. You can see semis here relative to the S&P 500 has been leadership until about the October timeframe when it started to consolidate, came down here to test the 200-day moving average, successfully did hold and is now working higher. RSI kind of working higher as well, although it does still remain in bearish ranges. We're keeping an eye on that. For me, I want to see semiconductors break to new highs. That would confirm price strength, lead me to believe that the overall stock market, i.e. the S&P 500, is likely to break to new highs as well. Another key theme that I'm watching are the FANG stocks. These are what I like to call the market generals. Again, they've been leadership. They started to consolidate but are now working higher. RSI in the process of shifting to bullish ranges. If FANG can break to new highs and if semiconductors can break to new highs, that would be a positive indication for the market in general as far as I'm concerned. Two key themes that I'm keeping an eye on. That's really it for today, folks. It's Friday. I hope everybody has a great weekend. Again, you can get your power feed by going to chaikinanalytics.com/PowerFeed TV. Powerful and profitable stock ideas and more every day delivered to your inbox. I hope everybody has a great weekend. Have a great Friday. Happy trading, everyone.